Okay, Dominique, ready to go now from the top, please.
From slide number 1, then.
Let me just introduce it, and then we'll go again. Apologies for the slight delay, ladies and gentlemen. We had a technical glitch just there. So welcome, everybody. And today, Dominique Raviart will be presenting the ITO Index for Q2 2015 with an outlook for the rest of the year. Dominique is our Director of ITO Research, and he'll be presenting for about 30 minutes, and then there'll be a brief Q&A at the end. You can enter questions at any time using the panel on your screen, the Q&A panel. So as you can see, we've moved to a new platform for our webcasts, and this is to optimize the customer experience, and we'd be very happy to receive your feedback on today's event. Also, if you're intending to tweet about the webcast, please use the hashtag ITOIndex. And so over to you, Dominique, for the main presentation. Thanks, Dominique.
And thank you, Paul, for this, and sorry about the glitch, sorry about the delay, and let's start this presentation again. As Paul mentioned, we're very much interested in learning more about your customer experience and certainly in understanding whether you like this platform better than the other. So as always, during this call, we're going to focus on the two sides of the story. We're going to focus on the large contracts announcements, the IT outsourcing contracts announcements, and we also be looking at the spending view. So up to the spending based on the revenues and also up to the Q1 2015. So as always, we think we've got a two-sided story. We look into the long-term view provided by the IT outsourcing bookings or contract announcements, and that's up to Q2 2015. But we also into the short-term analysis, and that's provided by the spending view up to Q1 2015. So with those two views, we think we have a comprehensive and complementary view of what's going on in this industry. Let me move on to the next slide, which is really about NelsonHall. And you've probably been listening to this already, but let me reiterate my two messages about NelsonHall. First of all, we service both the buy-side clients, the end-user clients, so to speak, but also the vendors. And I think that it provides us quite a complementary view of what's going on in this industry. We're not too many of us doing this type of double work. Second of all, we like to think we're fact-based, we're very granular, we're detail-oriented, and as a result, that gives us great insight into what's going on. So again, we think we're this double view of the market and addressing both end users and vendors and going to details that provides us a unique perspective of the IT services industry and also in the BPO services industry. Moving on to the next slide and talking about forward, let's talk about definition for a short while. And again, this is to avoid confusion while we speak. And certainly, with a number of us coming from the telecom and engine industry, we do use different words for different terms. So let me be very crystal clear about what we're looking at today. First of all, IT services includes in our definition professional services and IT outsourcing contracts. Professional services, that's consulting, system integration, software development, the short-term projects. And on the other side, we've got the multi-year contracts, mostly run services, so the long-term contracts, to speak. We do not, in our forecast, we do not look into or go into details about hardware maintenance and related services that are performed by the IBM hardware of this world and through their network of VARs, or value-added resellers. Again, trying to be very crystal clear, IT outsourcing includes multi-scope IT outsourcing contracts, so also referred in this industry as full outsourcing contracts or multi-tower. We include standalone infrastructure management, or also that includes network outsourcing. And we do include standalone application outsourcing, so application maintenance and support. This, as I mentioned before, this presentation will provide two views. One is the short-term view based on spending, and the other view is on the trends in 2 to 3 to 4 quarters, and that's provided by the booking views, the analysis of the IT outsourcing contracts that were announced in the past quarter or so. Bookings in IT outsourcing include the new scope contracts, so anything that is new. So the extensions and the expansions and the new contracts, as well as existing scopes, so renewals pretty much of the existing contracts. So therefore, as always, an increase in bookings does not necessarily mean there's an increase in spending. And in the past, we've certainly seen the contrary. And as always, all of the numbers presented during this call are NelsonHall estimates. So let me move on to the agenda for today. Very traditional. If you have attended this session before, we'll look into the bookings view for up to Q2 2015, so up to June. And again, that was going to provide us with the long-term view of this industry in IT outsourcing. We'll look into the Q1 2015 spending analysis, and then we'll spend quite a bit of time on the outlook for 2015 based on what we've noticed in the bookings and the spending views. Let's move on to the following slides and in the meat of this presentation. So this is about Q2. No surprise, and always start this key discussion by two very short slides to set the context. And the context is, from a yearly perspective, is that in 2014, IT outsourcing bookings were flat over 2013. So let me dig a little bit about it. In 2014, bookings were at about $32 billion in TCV. And that was one of the worst years of the decade of 11 years, to be specific, with 2013 and obviously 2008 being the worst year in the decade. So we're looking at the level of at the level of contracts that was awarded in 2014. That wasn't good. That was a fairly low level. Now there was a bit of surprise in this, because in the past, when we had an economic crisis, we had a surge in ITO bookings, in ITO contracts. And that clearly was the case in 2003. If you look at the red column or bar on the left side of the chart, and that was the case in 2009, 2010. Now, in 2014 or 13, we didn't have that surge. And in fact, as I mentioned, we have the lowest level of TCV in 11 years. Also, the fact that over time, the level of new scope contracts, so new type of business as opposed to renewals, that has moved from almost 90% to 30% over the decade. So you're talking about an industry that is saturated or getting more saturated. And of course, there are several reasons for it. First of all, there's pure market saturation and the fact that a number of countries have not opened massively to outsourcing. But also there's the fact that outsourcing by itself is about lowering costs, it's about lowering TCVs, and you've got accelerators in terms of reducing TCVs, namely cloud computing, but even more offshore delivery. And of course, renewals of existing deals means usually they're lower by 15 to 25%. So this industry is about decreasing costs, about decreasing TCVs, and that clearly shows that this market is going saturated. Now, how did we perform in Q1 2015? So right before this quarter in Q1, so we had a good start of the year in 2015. In Q1, bookings were up 50%, 50, to $6.7 billion. Quite a good start of the year, not dramatic, but quite good in that sense. Then was one mega deal, and we had a number of large deals, which was quite good, about 14 large deals in the zone of the region of $100 million to almost $1 billion, 999. How did we do in Q2? In Q2, if this slide appears, here it is. Bookings were down 60%, 60 in Q2. So we had bookings down 60% in Q2 to $4 billion. So after a good Q1, we had a fairly disappointing Q2. There was no mega deal awarded, and we had a lower number of mid-sized to large deals awarded this quarter. So the combination of no mega deal and a relatively low number of large deals means bookings were down 60%. So overall, for H1 2015, for the first semester, bookings were down 20%. Now, this 20% decline compared to last year, that means that about $3.5 billion of TCV was not here during the first semester. Is that dramatic? What does it mean? Well, that only means that actually the number is not substantial. And what I'm saying here, because contracts can be lumpy from one quarter to the other, that doesn't provide a full outlook for the year. So we can notice, we think we've got a Q2 which is anecdotal with a little IT outsourcing activity, but at this stage we have no statistical guidance for the full year. Moving on to the next slide, and this slide is about another important KPI. This is the level in blue of new scope contracts, and we differentiate the level of new scope contracts versus existing scope because it gives us a good idea of if we've got new contracts with new clients that are adopting IT outsourcing and so opening up to IT outsourcing. Now, usually that range, the blue range, the new scope contracts, that varies from 15, 20 to 35, 40. And actually the average last year was 40. It was very strong in Q1, 72% for the deals above $100 million in TCV. And in Q2, we are at 39%. So if you look at the right column, that's clearly 39%. So we're back to a normal range after a very high range in Q1. So again, taking a step backward, a very slow Q2, but in terms of new scope contracts, this is quite good. Mixed messages, I suppose. Looking into more of a geographical view, and let's start by an important market, which is of course North America. Bookings, ITO bookings in North America were down by 20%. And we had for H1 a flat level of bookings. So flat over H1 plus 20% in Q1, minus 20% in Q2. The math are fairly easy. If you look down at the below chart, after a high level of new scope contracts in Q1 at 60%, we're back to average and quite a little bit above average at 37%. So this is again mixed messages, low, unchanged level of bookings, but a bit higher than usual new scope contracts level. Europe was slightly different this quarter. Bookings in Q2 were down by 60%. Were down by 80%, 80, to $1.4 billion. So very, very, very quiet Q2. Again, contracts, especially in one geography, can be lumpy, and especially the largest can slip easily from one quarter to the other. But we have to say that then H1 bookings were actually down by 40%. So again, not a good start, but again, nothing that we can infer for the full year, just a trend. As in the US, if you look at the level of new scope contract, and that's the bottom chart, clearly on the right side, we've got 47% of new contracts with a TCV of $100 million in TCV, where new scope contracts. That's lower than Q1, 74%. In Q2, we're back into the normal range, but it is a good start of the year. And again, my comment is mixed KPIs, really. Low level of bookings, but at the same time, quite a positive KPI in terms of new scope contracts. Let's dig into this a little bit. Let's move into the sectoral view, the vertical view of bookings. I have to say, and I've repeated this over years now, for more than 5 years, if I'm not mistaken, is that historically 3 sectors, government, manufacturing, financial services, have represented a bit more than 70% of our bookings, so 70. And over the years, we've seen the mix between those 3 sectors changing, but the aggregate has never moved very significantly from 70%. And in H1, we're absolutely back to this level. in H1 2015, we had 69%, so very close to the average of 71% we've seen in the past years. Financial services is back where it should be. That's the right column, H1 2015. It's at 25% of all bookings. Government is at 30%, so it's a bit higher than usual. And manufacturing is at 14%. It's a bit lower, while significantly lower than usual. And I've listed on the right side the large deals that were awarded during the first half of this year. As always, we have a bit of disruptions with new sectors having strong level of contracts, usually on the back of several deals, not a lot of deals, but a number of small to mid-sized deals and large deals. Clearly in transportation, we've had TNT in the Netherlands, Royal Mail in the UK, and same thing for healthcare in the US with an Anthem contract. We'll comment a little bit more on what's going on in the healthcare sector in the US and the ongoing consolidation of clients. So as always, a very traditional trend in sectors. We monitor this closely because it would help us detect if there was any disruption. But so far, even those lower level of volumes, we still see the good old trend of those three sectors: financial services, government, and manufacturing, accounting for almost 70% of all bookings, which is very interesting. And maybe I should comment further on this, and that's a question I've had several times. But no, if you really were to sort of size financial services, government, and manufacturing in terms of IT services spending, so professional services and IT outsourcing, what that level of those three sectors are, do not represent 70% of those spending, much more towards 50% or so, a little bit more. But so we've had for many, many years three sectors that are prone to adopt IT outsourcing in key geographies. Trying to reach slide number 13, and this slide really is not about TCV, but the number of deals we're aware of that were awarded by quarter. So in blue, you've got the mega deals, the contracts over $1 billion in TCV, and in red, you've got the contracts, again in numbers, for those contracts with a TCV between $100 million to up to $999 million. Starting by the blue line, the mega deals one. So this line varies from quarter to quarter, from 0 to 5, and in Q2 we were at 0, so no mega deal awarded this quarter. At the same time, if you look at the red line, we had about 10-ish type of contracts that were mid-sized to large that were awarded this quarter in IT outsourcing. That does not include BPO. And we think it's clearly the low level of bookings this quarter is really a reflection of those two parameters. No mega deal, that's in the as low as it can be in mega deals, 0 deals, and then 10 is sort of a minimum for the mid-sized deals. So I guess what we're saying is conjunction of the factors: very low activity in mega deal, low activity in mid-sized deal, and that sort of a bit of puts lights on why we had so little TCV this quarter. Let's complement this IT outsourcing view, the bookings view, by the spending view. Again, as I mentioned, the bookings view provides us a trend on what's going to happen in the next quarter or so. But the spending view, which is really based on collecting, analyzing, and cleaning the data from the revenue side of things from the vendors, that gives us a good view over the next quarter, the next 1 to 2 quarters. So these are two very complementary views. And we think in Q1 2015, spending was between probably around 1%, plus 1%. Let me stop here for a moment. Yes, the spending view is really pragmatic. It's based on this revenues view of all the major vendors in the major geographies. And we take that constant currency, constant perimeter numbers when we have them, or we estimate them. And we do add and subtract a little bit of things that we're aware of, like subcontracting. bottom line, we think we've got a good KPI of the level of spending on a quarterly basis. And what clearly we've seen in the past, if you look at the left side of this chart, is clearly in 2009, we had a dip of IT service spending in Q4 2009, Q3 to Q4 2009, and then went down by 4%. Now we had a big rebound in IT service spending up to 8%, and then we had another crisis in the 2010, 2011, 2012, and we didn't see the same pattern. At the opposite, we saw a declining trend, a very linear declining trend towards Q1 2013, and then that we've seen a little bit of variation around this 2% zone since then. So we've had a different pattern, which is very unusual, and really that does raise a number of questions, because clearly, at least in the US, in the Western world, and most of the European geographies, and even in Japan, we're in positive territory, we're in positive GDP growth. Now in countries like Netherlands, France, Japan, we're in, or Spain, we're in, mild growth in terms of GDP, but we're in, very significant growth in terms of Australia, US, UK, and Germany. So overall, we should be seeing a different pattern. We should be seeing more growth in IT service spending, and we're not seeing this. And that does raise a question, and I think we'll try to answer to this question. Dig into it. Let's move on next with this chart on a traditional view between professional services. That's in red. That's a cyclical business, and in blue the IT outsourcing spending, and that's a long-term business. Starting by the blue line, so the IT outsourcing IT outsourcing spending. We've seen it moving from positive territory up to 4 to 5% in 2011, which was good, into negative territory between 0 and 2%. And we've mentioned several times already that we think now the new growth for IT outsourcing is clearly flat growth. So we think over time the average in IT outsourcing spending is going to be close to 0%. And we think this, we're seeing this on the back of the analysis of IT contracts that is decreasing TCV year after year. Obviously, we've got other factors coming in, offshoring, cloud computing, and so forth. What is more, I suppose, surprising and raising questions is the red line. This is a cyclical business. And the professional services. So we've seen that business moving up to 10% in the good times in Q1 2011 and going deep down as well. We've seen becoming a much more stable business. So not staying in positive territory in 2013, but still remaining well below 5%. So what we're seeing is professional services again is becoming more less cyclical, but also more resilient, which is interesting, considering the fact that this is short-term contracts. Let's move on to sort of a traditional analysis now between the US, North America to be specific, commercial only, because we're excluding anything with the US federal, which has its own specifics and pattern those days. Namely, it's been declining very significantly in the past 5 years and now plateauing. And so that's the blue line, North American commercial, and Europe across sectors. And so pragmatically, we've seen same level of patterns up to 2013, and since 2013, we've seen two different trends, two different lines, two different patterns. We've seen our commercial sector moving, ranging from 4% to 6% in North America, whereas on the opposite, Europe was ranging between 2% and 0%. So we now clearly disconnect between those two geographies, and we think this has a lot to do with offshoring. So if you assume that offshoring in North America is fairly complete, is fairly well covered to in large extent, and if you admit that offshoring now is spreading towards continental Europe and is well covered in the UK. We think the result of this trend is we're going to have Europe now plateauing for the next 5 years at 2% growth in IT services overall in terms of spending, whereas the US is going to keep on increasing, probably between 4 to 6%, providing favorable economic conditions continue to prevail in the US. So we think probably offshoring has got a role to play. Explains quite a bit why we're seeing IT services spending overall globally becoming sort of a very low growth type of industry and being less cyclical than in the past. And as far as we can tell, we've seen offshoring happening with the large enterprises in Nordics, in the Netherlands, probably in Germany, spreading now to some degree in France. So we think for the next 5 years, Europe is going to be level of spending is going to be slowly increasing. At the same time, for a client perspective, that's good because their budgets are going to decrease. So it's probably positive for the industry and for the client at least. Let's move on at the vendor performance. Again, that's a slide we're being asked quite often, so I've included this slide this quarter. This quarter analysis was a bit more complex than usual because of very significant currency fluctuation issues. So if you look at the right side of the right column, this constant currency, CC, constant perimeter, CP, Q1 2015. I've put the reported numbers of growth of those vendors. Obviously, there was a significant impact of the currencies, probably 3 to 4%. Bottom line, we've got TCS that is probably still going at the same growth than usual on a constant currency, constant perimeter basis. This is also true for HCL. Cognizant, with its acquisition of TriZetto, is much more visible, much more difficult to analyze, but we think we've got consistent picture of Wipro and Infosys. Bottom line, we still have TCS, Cognizant, and HCL performing above the two other main vendors that are Infosys and Wipro. And Wipro and Infosys that still are taking some time to emerge from their, I suppose, short-term to mid-term challenges, still growing much faster than the rest of the onshore industry. Then among those vendors that have an onshore background, we've got Accenture, and Accenture now is back to acceleration, double-digit growth at constant currency, constant perimeter, excluding the acquisitions they've made in the past few quarters. So Accenture really reaping the benefits of turning to the Indian offshore model. Capgemini being slightly under what was expected, largely because of the rundown of the key contracts in the UK with the HMRC, but probably at 5% if you exclude this impact, this one-off impact of HMRC. It's worth noting that Capgemini Atos announced, finalized the acquisition of two significant acquisitions in the US 1 week ago. And for those two vendors now, North America, namely the US, has become the largest market, which is quite a positive move, I suppose, in terms when you got a US economy that is still buoyant. A bit of a question mark on T-Systems this quarter on their market unit, unexpected rebound for T-Systems. At this point, we don't think this is, we think this is anecdotal as it's not a trend. IBM was slightly disappointing and actually very disappointing this quarter with a 3% decline, constant currency, constant perimeter, organic, so to speak. And we've got a Fujitsu that is, very much impacted by what's going on in the core Japanese market. And Japan is going to slight growth this year. So the performance of Fujitsu is perfectly in line with their core market. A bit of a surprise about the companies that are in turnaround or restructuring. Clearly, CSC is in line. 1 year ago, we thought CSC was rebounding. They had a 1 quarter off with a good performance, fell back to -5% in Q1, so still declining, and that's probably going to go on for the next quarter or so. HP, -10, so probably accelerating. The decline is accelerating again. There's quite a bit of uncertainty now for HP because of its separation into two businesses, and the same comment is true for CSC. And also, HP is going to, I suppose, the straightforward way of saying it is they're going to restructure people and lay off quite a number of people, and increase their offshoring ratios. So we're probably looking into further quarters of decline for HP in the quarters to come. CGI was a bit of a surprise, -6% this quarter. Although the management of CGI is being sort of guiding into a bit of a rebound or plateauing into at the end of this quarter. But certainly it was a bit of a disappointing in terms of organic growth and organic decline this quarter, a bit more decline than expected. The downside is CGI is becoming much more profitable. Let's move on to the outlook for 2015. And let me summarize a bit of our thoughts for this quarter. So in terms of the bookings view, bookings were down in Q2 by 60% and down 20% in H1. So a negative start of the year with a comparison over 2014 that, as always, was not an inspiring year. It was a very quiet year, so it's a bad start of the year. Having said that, what's missing is $3.5 billion in TCV, and that can be easily made up by a couple of deals or one deal only. So not enough of the drop in bookings were not dramatic enough to give a trend at this point. And certainly, let me remind you that last year, in 2014, we had a very significant growth in bookings in Q4 by 50%. So in terms of bookings and contracts, this is all lumpy and anything can change. Nevertheless, the trend for this year for the first part of the year is quite negative, with slightly good news regarding the level of new scope contracts. We think because of offshoring, but also cloud computing, and the next quarter also because of automation, we'll have now IT service spending being less and less, remaining in the 0 to 3% type of range in terms of growth. So we think for the next 5 years or so, with the IT service industries has changed in terms of patterns, and that will last until full of Europe has adopted offshoring, I suppose. And this is in spite of the fact that we have major trends happening in terms of innovation, in terms of discretionary spending, not to mention SMACs, and so therefore digital, mobile, and so forth, and social. So the irony of this industry is you've got, I probably shouldn't be saying a paradigm shift, but you've got a new wave of innovation that has been going on in the past 2 years. But that wave of innovation is not large enough to counterbalance the decline by offshoring and the lower level of IT outsourcing contracts. Bottom line, we're revising down our forecast for 2015 in terms of spending. So for IT services, we thought 2015 was going to be better than 2014 than last year. Bottom line, we're lowering from 3% to 2% IT services. That's the below row, IT services plus 2%. And then we've provided a bit more granularity by service line and by geography. Have to say that the 2% growth for IT outsourcing is looking less likely. And we'll see how it goes in terms of spending for the Q2, but it's probably going to be much closer to 1%. If the trend continues. So we'll see how it goes. It will be making adjustment, obviously, but 2015 in all likelihood is not going to be substantially better than 2014, and that clearly is the disappointment. I'm done with my presentation. Before I move on to the Q&A sessions, if you have any question, let me remind you that John Wilmot, our CEO founder will be presenting its BPO Index call this week, and we'll be having the next IT Index call early October 2015. As always, if we've played with the format of this IT Index call, and we've played between having those calls very early in the month or quite a bit late in the month. So our proposition was be the first on the market with the initial analysis of what's going on in the market. Another way of looking at it is actually wait for the result of the firm so we can find out and have a good view in terms of spending view. It sounds like your feedback we want the earliest, we want the early discussion. We're more interested into learning very quickly what's going on. But if you do have a different view, if you think we should be waiting a bit more to have a bit of a spending view and spending analysis, do let us know, and we will be really more than happy to change and amend our model on this one. I'm done, thank you. Paul, did you have any questions?
Yeah, we've had quite a few come through, Dominique, so thanks for the presentation. Let me start and get through them. We have about half a dozen. This one says, you have pessimistic forecasts about the growth of the IT services industry. Do you think IT services spending can grow again, and in what sort of timescale?
Okay. No, I think offshoring being the big thing, and cloud computing to some degree in infrastructure services and now automation. But really offshoring being one of the main things, we're looking to seriously 3 years of flat growth in IT services, largely because of Indian offshoring and depression prices. Is that going to be 3 years, 4 years, 5 years? It's hard to tell, but in the midterm, we have much lower spending growth ahead of us, in spite of the favorable economic conditions.
Okay, great, thanks. This one is a sector-specific question. Can you talk about the status of the government ITO business?
Sure. Okay.
I've got a feeling it might be related to the US, because I know the government varies depending on country, but I'm pretty sure this is a US-related question.
Okay. So in the US, really, we obviously this is I suppose you're referring to the federal sector in the US. And that's really very much a very political discussion. So from what we can see, but again, that can change quite significantly. We're looking into flat growth in terms of spending into the next government fiscal year. But having said that, that can change a lot. What's clear is in the past 5 years, we've seen dramatic decline in spending and to a sort of plateau in the past few quarters. Having said that, anything which is political can change, and that's the beauty of political decisions. So probably going to plateauing, but that could change.
Great, thanks. This one is talking about SaaS, or software as a service. Is that going to impact application management spending?
Okay. It's been sort of a traditional point of discussion. Software as a service, meaning certainly less hosting spending, less infrastructure servers, networks spending from the client perspective, and that spending being shifted to the ISV, to the software vendor. Now a lot of the early SaaS applications were fairly standard with less customization. And therefore, there was the expectation that that would lead into less application maintenance support, less enhancements, and therefore that would ultimately decrease the spending in application management. What we're seeing now with the widespread adoption of SaaS application, we're seeing now a bit more customization of those applications, certainly much more integration with other applications, and therefore the benefits of having the standard type of service from the application is veering off towards more complexity. So in short, the application management market, maintenance support, the opportunity, the work is increasing around SaaS application. And that's not something we thought would happen in the past 5 years ago, but clearly we're seeing that happening. And Accenture is actually very talkative about it. So a bit more work in terms of maintenance around application management, I suppose, in SaaS applications.
Great, thanks. Here's a question about one of the big themes. Maybe you could comment on what do you see as the impact of digital on IT services?
Okay, I suppose I touch on that one. A major driver, probably half of digital spending is actually related to analytics and big data and all the advanced visualizations, advanced analytics type of work. Certainly that spending is growing, whether it's growing by 8%, 10%, something like this. But what's interesting that, whether you're talking analytics and digital, there's a lot of activity around it, but it's not big enough to counterbalance the sort of low growth in IT services overall. So very dynamic set of segments, but not large enough to drive growth in this industry.
Okay, thanks very much. Let me see, just one or two more, I think. This one's talking about vendor consolidation in the IT services sector. How's it played out, and how is it affecting pricing? Has pricing pressure spread beyond commoditized areas? I'm not sure I'm not sure if you get that, but that was the question as it came through.
Okay. Well, I suppose there are many aspects to it. Whenever there's consolidation in IT services among vendors, there are several aspects to it. The vendor being merged might decide to lower its prices, if only to start again growth in contract wins, or on the opposite, it might start to look into renegotiating loss-making or low profitability contracts. So it's hard to make a judgment again what's going on in this industry in terms of consolidation, because all the vendors have different strategies. And consolidation, this is still very much a fragmenting market, so the consolidation doesn't change the fragmented nature of this industry, and so the prices are not likely to go up just because there's consolidation in this market. I think it's going to be, it's always very anecdotal, depending on one vendor to the other.
Okay, great. Just a final question then, Dominique. How has the nature of managed services changed? Are clients becoming more interested in using a single vendor for IT services?
No, again, many trends. 15 years ago, you had on one side for the large deals, full outsourcing. On the small contracts, managed services. That was easy enough. Now we see a lot of diversity in the models. You can have full outsourcing for large firm or a mid-sized client. Usually it's full outsourcing for mid-sized firms or small multinational firms. Then you have selective outsourcing among the clients that used to use full outsourcing. But on the other end of the spectrum, you get those small managed service contracts that are getting bigger in size and a lot of framework agreements. You also see, and we've seen that happening in the past 5 years, into aggregation of infrastructure management and application management, so stacks or, as a stack type of service or integrated services by application or functionality or functional type of application or function of an enterprise. Bottom line, there's a lot of diversity. The market is more geared towards towards selective outsourcing than full outsourcing, but then a lot of diversity, and I suppose the rising trend is really integrated in IT infrastructure services and application services, and potentially at some point in the future with BPO services.
Great, thanks, Dominique, and I think that's all we've got time for. So if I may summarize, thanks for joining us today, and thanks for your questions. Your feedback would also be very welcome on the new webcast platform. Just to reiterate that the ITO Index Webcast highlights the latest developments in the global ITO marketplace, and these quarterly analyses form just a small part of our continuous ITO research. So our subscription clients can benefit from very comprehensive market analyses, vendor assessments, including our neat vendor evaluations, case studies, databases, and of course, the personal support of our expert analysts throughout the year. So if you'd like to find out more about becoming a subscription client, please get in touch with my colleague Guy Saunders at the address shown on the final slide. Okay, so thank you for joining. Just a reminder that the BPO Index call with John Wilmot is on the 9th of July, And thank you for joining again today, and have a good day. Thank you.
And thank you. Thank you all.